2020 was a record year for economic contractions, but will 2021 turn this around and see a record for economic growth? Well, we're here to discuss that with Frank Holmes, CEO of U.S. Global Investors. Frank, happy holidays. It's good to speak with you before the new year. How are you?
Outstanding, my friend, and happy holidays to you and everyone at Kitco Marietta.
I'm happy to speak with you. I think you are my final interview for 2020. What a way to close this year off. What a tremendous year we've had, Frank. Looking back, how could you sum up this year in a few sentences for you?
Totally contrarian. It's been so many things have been massively contrarian for U.S. global investors. JETS ETF falling 70% to $35 million, and now it's over $3 billion, going from 35,000 daily traded to 3.5 million. I mean, who would ever expect that? Millennials coming in and discovering ETFs and stocks the way the 90s when baby boomers discovered mutual funds and stocks. Would never have expected that. I didn't expect the Ethereum and Bitcoin to go to the rally that they've gone through. But I did feel comfortable that gold would trade higher with all this collective money printing, but that money printing is in trillions of dollars. The U.S. is now hitting that 10 trillion this year, which we talked about much earlier in this year. That's what it'll take. But look at Europe, look at China, look at Japan.
You did call $10 trillion in terms of stimulus, so that was the right call. What does that mean for the economy? What is the significance of that number, Frank?
It's huge. It's huge because you can see what happened first with China, and then you saw the first money in Europe, and then you saw America, and America's been more sustainable than Europe. It's ignited the PMI. We've talked about this before. That Purchasing Manufacturers Index is a great leading indicator. And when that turns for China and that turns for America, where 40% of all global trade, copper, iron, all the metals start surging. And I think we're going to continue to see this. Now, this last $2 trillion coming out by Congress and President Trump, well, that's going to be huge for consumer spending. 70% of the American economy is consumption. And guess what? I think that first quarter GDP is going to be over 5%, not 3%, but over 5%.
Okay, we're going to come back to your themes and the favorite investments for 2021. But before that, I have to ask you about cryptocurrencies. Bitcoin, what has been happening since last we spoke? It just kept going up. It's at $26,000. I mean, we talked about breaching all-time highs at around close to 20. Now it's at 26. So the questions I've been getting in my personal inboxes were, can we see a retracement now? Is now the time for a pullback?
Well, mathematically, yeah, you can get a pullback, but I think the issues are you have all this money printing, and there's no doubt crypto's become an alternative asset class. And having Mass Mutual all of a sudden buying Bitcoin and putting it into a cold wallet is another institutional sponsorship. There are so many elements. BlackRock is hiring a crypto blockchain analyst, building out because there's more demand for their $6 trillion in assets they have. Well, now they're looking for someone to specialty. It's a growing theme. But for Bitcoin, the halving was significant in May because of basically the mining supply halved. Guess what would happen if the 90 million ounces a year of gold mines halved? Gold prices would be probably $20,000 too. You know, it's just recognizing that people are still buying Bitcoin, but the supply is all of a sudden halved. So they have to reach out and buy other coins. So I think this is very bullish for what's happened in Bitcoin, but Ethereum's outperformed Bitcoin. Ethereum has been another spectacular performer. And another reason for that is supply restriction. The supply is the DeFi. DeFi uses a lot of Ethereum as a backbone, and the Ethereum coin is sucking up the Ethereum. Now we have Ethereum 2.0. You tender it basically for staking, you get a yield. Well, that's taking Ethereum out of it. Whereas what's called Metcalfe's law, more and more people are buying Bitcoin and Ethereum. Therefore, with supply restrictions, you see that prices can trade substantially higher.
Last time we spoke, Hive was trading around, $1.70 per share. It's at more than $2.40 now today. What happened in the last 3 weeks?
Well, it went parabolic there. We know it surged to $3, traded millions of shares, and I think it became a lot of the enthusiasm when you looked at a lot of the other Bitcoin mining companies. They're making announcements for equipment they're going to buy, and they're going to become big revenue generators. but not for 6, 9 months, now even 12 months, because there's no equipment. There's a real supply issue of getting wafers to make these ASIC chips. And COVID's only added to that drama. So that the issue is you're seeing, whereas Hive has revenue and cash flow today, and it's very robust. So I think that was part of that whole surge. And then we had institutional sponsorship, like I said, Mass Mutual. And Hive has become a proxy. Motley Fools wrote about it, saying it's a proxy because we also own the coins and we mine the coins. We sell enough to pay the electrical bills and salaries. Otherwise, we store the coins in a cold wallet. And that caught the imagination as Bitcoin went through $20,000.
Yeah. So here's a question that I've seen circulating on the internet. This is something that a lot of people are wondering, actually. So if you assume that Bitcoin is like a digital version of gold, they share similar attributes, then if Bitcoin's at $26,000, why isn't gold at $26,000? Is that a legitimate question, or do you think they're comparing apples to oranges?
Apples to oranges. They're both alternative asset classes. And you're not having central banks use Bitcoin as a monetary asset. The Turks bought gold, and when they couldn't get US dollars for trade, they sold their gold. Then they turn around and buy back their gold. We're seeing that there's about 15 countries that get a lifeline with the Federal Reserve, where they can basically do a big repo to get US dollars to facilitate global trade. And those countries have not had it. They sell their gold to get that US dollars to facilitate trade. So I think that gold is still the fourth most liquid asset class in the world. It's much more liquid than Bitcoin. It's a lot less volatile. Gold is as volatile as the S&P 500. Bitcoin and Ethereum can give you nosebleeds. And that only exasperates Hive blockchain and Riot. And if you look at their DNA volatility, they're like Tesla. Tesla has massive volatility on a daily basis, over 10 trading days, over 60 trading days. So it's recognizing that those asset classes, as they're growing, are just going to have more volatility. Gold's been around for 5,000 years. It's a monetary asset. It's much more stable.
You brought up the key word, which is volatility. People say that Bitcoin is a store of value or emerging as a store of wealth and value, but can that still be applied if volatility, like you said, is like Tesla? If something moves up and down so much, can we use that confidently as a store of value?
I think that it's a store of speculative value.
Okay. All right, that's one way to word it. Yeah.
I think it's going to become like Andy Warhol prints.
Okay.
It before the Mao prints came out with the 1,000 prints in 5 different colors for $1,000, $10,000 to $250,000. They grew up as more people discover Andy Warhol, more as the China economy boomed. Chinese all of a sudden buying the Andy Warhols. We had this huge rise because of limited supply. So I think that Bitcoin is going to go through that wave. There's going to be that alternative asset class.
So do you have an outlook for Bitcoin and gold prices for the new year? Higher, lower? Where are we headed?
Well, I think they trade higher. There's no doubt this money printing, it doesn't show up immediately like we talked before. If you look at 2009, all the debt money printing that took place 08, 09, it was 3 years later that gold went from 700 to 1900. So that's why I still feel very comfortable in the next 3 years, we can see gold at 4,000.
You know, on my way here, I was taking an Uber to the studio, and the cab driver was asking me, "Hey, what do you do for a living? What's your job?" And I told him, I talk about gold and the economy. And then he starts asking me a bunch of questions about gold. He was like, "Hey, I recently started following gold and precious metals. It's been rising. I want to buy some more." You know the old adage, if the cab driver starts asking you about something, it's probably overbought, right? Do you agree with that? Is that what's happening right now?
Well, maybe the Uber driver's got a PhD, so that's the only difference. There's a lot of very highly educated Uber drivers.
Okay, that is a fair assumption. You're right. Okay, we got to talk about the economy now. I want to get Frank Holmes' major investment themes for 2021. 2020 caught everybody off guard. What are you looking forward to for 2021 that are going to drive your investment decisions? Just bullet point us for us.
Once again, government policies are a precursor to change, so we monitor and track fiscal and monetary policies and to get an idea where money will be going and flowing towards. The big headwind will be Biden and his group. Will they raise taxes everywhere? What will they do? Because that's always friction on the economy that will affect different industries. So that's probably the most unsettling, unknown thing ahead of us. But the momentum is so strong right now that I think the G20 countries are going to continue this sort of a sporting event of using MMT, modern monetary theory, to try to push global sustainable growth. I think that ESG investing is going to become more important. I think that we're going to see gold prices trade higher because this money printing is not going to go away. I think we're going to get CPI rising. I think we're going to see inflation rising. It's just not showing up as of yet. It's populating, but we still have negative real interest rates, and that'll be a very positive note. But governments have been able to keep the engine going with negative real interest rates. They're going to keep doing it until all of a sudden it hits the wall. And I think that in the next 3 years, we're going to see all of a sudden that pattern breakaway where gold really becomes a unique asset class.
CPI rising. Which components of CPI do you think will rise more?
Well, remember I've said before that they changed the algorithm. So if you use the algorithm when gold hit 850, inflation's running at 8-9% today. I'm a big believer inflation's much higher than the reported 1.4, 1.5. I just don't believe that because I see what I'm spending money on. I see for buying Christmas gifts. It's just more costly. And I see what professional service fees and legal bills are. They're going up much more than 1.3% or 1.4%. So I think it's way understated. Housing is up. I know that lumber prices are up 40%. Cost of new construction, housing is up 40%. So I think inflation's being masked.
It's being masked. Why do you think that's happening? Do you think the central banks don't want really volatile prices to affect their monetary policy? That's why they look at core inflation, right? They don't look at headline.
Correct. And I think there's probably something there. And I think that people have to really respect that the G20 finance ministers and in particular their central bankers work together. And presidents and prime ministers come and go, but so often the chief banker of the G20 countries are there through many terms of presidents and prime ministers, and they all connected to each other. They all have relationships, and they have symposiums together. So I think that's something people have to be really cognizant and sensitive of.
Okay. Now you're telling me offline inflation in housing is starting to show. How is that possible, Frank?
Well, ever since 2009, the construction of new housing and lending restrictions, et cetera, mortgages had risen. Now they've come down. But I think with COVID, 5 of the big sawmills in the U.S. have shut down. So if people are just trying to build new houses, and COVID's basically pushed so many people to go to the country and build new homes, they want a bigger house or they want things in the backyard. Take a look at Home Depot and Lowe's. Those stocks have been on a tear. Why? Because people are stuck at home. They're all refurbishing their homes. And if you look at new homes being built, there's a shortage of them. So I think there's pretty big pricing pressure here.
That seems counterintuitive. You would think that during COVID, with people getting evicted left and right because they can't pay their rents, housing prices would fall under pressure, right? But you're saying that's not happened.
No, everything's contrarian now. I mean, in fact, the checks helped out a lot of people. The airlines industry had a huge infusion. So rather than seeing all these workers get laid off and then get rehired because of all the regulatory FFA, it was better just to give money to the airline companies to keep them employed so they could turn on a dime. So remember, they went from down to 90,000 daily people flying. Now they're up to 1.3 million. They had to have people ready to be able to process and move those passengers. So I think that they're spenders. They're buying food, they're buying gas. What's really been on a tear is Amazon. This morning, all my Amazon food was at my doorstep at 7 a.m.
Well, here in Canada, we're back into lockdown, so we don't have a choice. I have to buy basic necessities. I have to go to Amazon because all the stores are closed except for the grocery stores. So yeah, definitely Amazon is one trade to watch. So basically just do the reverse of whatever logic tells you, right? The economy is going to do poorly, buy stocks. If people are getting kicked out of their homes, buy real estate ETFs.
but the economy turned because of all the money printing and what the governments did collectively. So you did see that money trickle down right down to the lowest common person, to the everybody. Everyone got it. So I think what's hard hit are restaurants. I think that they've been hit the most, indoor dining, places like that. But they've reinvented themselves. And I think that you have to take a look at, in the US, California Kitchen went bankrupt because they didn't have a good delivery system. Whereas other companies hire 10,000 employees and all of a sudden you see Chipotle stock taking off. And who's adapted the fastest to this crisis are the ones that survive. So the magic as a financial analyst look for, where's the revenue growth? Which industries in America grew the best in the last quarter, the last 3 quarters? Take a look at those industries and you can see a high correlation of great stock prices.
What about economic growth, Frank? Are we going to see a contraction in Qs 1 and 2, or are we going to see growth?
Oh, no. Well, maybe in Canada, but not in the US. It's on fire. It's going to be big GDP numbers. They're thinking it's going to be 3%. It'd be 5%, 6%. This amount of money is being spent now as we talk.
I've had a lot of market bears and investment bears on the show. And one of the arguments is that we haven't seen the full extent of bankruptcies yet. That's going to happen in the next 2 quarters, and we're going to see a major market correction in equities and basically everything else. So I know you don't agree with that viewpoint. Walk us through why that rationale or that assumption is wrong.
Well, the bankruptcies have already taken place, and many companies were bailed out. Small businesses across America were given capital, and so I would share with you, I don't believe that. I believe what would derail an economy or market has always historically been government policy. So fiscal policies could derail the economy, be rising taxes on personal consumption and corporations. Monetary would be raising interest rates, cutting money supply. Those type of factors, taxes or a whole set of new regulations, which is friction on any industry, that would slow down the economy. But right now, it's on a tear.
Yeah, so that was my final question to you about the economy, was taxes. Are you not concerned that the Biden administration is going to raise corporate taxes, capital gains taxes? All that's bad for investments.
Yes, and markets will adapt and adjust when it happens, and there'll be winning industries and there'll be losing industries where that capital is going to be allocated. I think in the mining sector, and you see mining companies really pushing for a very powerful ESG footprint. They've been doing it all along, but even more so now to be able to attract that capital. And there'll be lots of breaks. I think there was almost $1 trillion raised for greens infrastructure spending in Europe. The government will give money for anything that's green, but to try to create jobs with a very focused. So I think we're going to see that type of evolution take place in the next 4 years.
Okay. All right. Final question for you, Frank. So I'm a millennial, as you know. Most of my friends are millennials. So let's say a millennial wants to start a New Year resolution to invest better in 2021. So somebody in their late 20s, early 30s, what should they be doing with their money?
When you're young, invest. You can take risks that someone my age shouldn't be taking big risks on. Taking all my money and putting it on something speculative is very risky at my age. But your age, it's okay. So speculating on the junior mining sector, I think that's prudent and that's wise. Owning some gold, and remember the volatility is nothing like you're expecting that you're going to get from speculating on a junior mining company, or find the latest healthcare technology company. There's going to be a big boom of telemedicine. It's going to be a growth industry. So focusing on that, what your age is, if you're 25, that means you should be 75% invested in growth ideas, 25% in conservative ideas. If you're 50 years old, it should be 50-50. You're 70 years old, it should be 70% very conservative income generation, 30% more growth.
A lot of my friends have called me up recently in the last couple of months, even the last couple of weeks, to ask me about gold. And these are people that I never would have expected to be interested in gold. So what has this sector done this year to attract new demographics of investors, Frank?
Well, I think the interest by many highly respected and successful hedge fund managers from Druckenmiller to Paul Tudor Jones, in particular Ray Dalio. Ray Dalio's footprint has become massive on YouTube. A lot of millennials follow YouTube. That's how they learn. And Ray Dalio has always been an advocate of having gold as a rudder, having your portfolio rebalancing. So I think that that's been an important part. And then for the stocks, I think the big crescendo was Buffett buying Barrick. All of a sudden legitimized gold mining stocks as long as they had free cash flow yield.
Right. Okay. Frank, excellent update as usual. Happy New Year. And I look forward to catching up with you in 2021.
Happy investing and stay safe.